Sooner or later, we'll all have to ask ourselves, should we go with Chinese chips or American chips? There's a very real possibility that the world will have to face this question. Should we choose Chinese chips or American ones? Because it's likely that both will soon be able to offer similar quality. Just recently, China debuted a new rising star in the AI industry, and it's making waves. The company, More Threads, is a chip design firm, and as soon as it went public, its stock shot up by 425%. This is about China's IPO sector. Since 2019, there hasn't been a surge this strong. And to clarify, More Threads is a chip design company. Their business model is intentionally set up to be just like NVIDIA's. China's goal is for More Threads to become a direct competitor to NVIDIA. This is different from SMIC, China's previous chip company, which focused on manufacturing. But More Threads is all about designing cutting-edge chips and staying up to date with the latest technology. If China succeeds in enabling More Threads to design chips that are as advanced and high-tech as those in the United States, what the world will see is NVIDIA-quality chips at Chinese prices. Now, in this video, I'm not here to analyze More Threads stock. Instead, I want to talk about something even more interesting: the tangled web and the back and forth in the AI industry between the US and China. One side criticizes, the other responds. Let's take a look at who's currently struggling and who's leading, because China has openly said, America wants to sell us chips, we're not buying. By the way, you can support this video. Do you prefer Chinese chips or American chips? You can vote using this QR code. Or if you want to support the Sci Money Monster channel, just hit like, share, and leave a comment to chat with me. And what I'd love most is for you to hit subscribe. Just once is enough, no need to click it again. That way, next time I come up with something new, we'll get to see each other again. If you're wondering what's so good about Chinese chips versus American chips, in this video, Sci Court will start by talking about More Thread because it's a simple question to ask. The first question is, why did More Thread's IPO just launch and then skyrocket by 425%? The answer is really simple. It's because investors rushed in. Next question, why did investors flock to More Thread? The answer lies in this number, right here in this headline. $3.4 billion. That's how much the Chinese government pumped in to support More Thread. $3.4 billion is a huge amount. You could say the Chinese government really went all in. So the question is, why did the Chinese government go all out like this? Why did they pour so much money into More Thread? The answer isn't too complicated. The answer is so that China doesn't have to rely on an AI chip supply chain from the United States. So there's absolutely no grid center like this at all. Basically, what they're doing today is cutting ties for the sake of sustainable independence in China's AI industry. If China doesn't take action now, do you know what will happen in the future? China will end up as a victim in the game, the United States' strategy of sneaking in adversaries into China's AI industry. How would that happen? Keep listening. Here's the thing. If you've been following the news about semiconductors and sales, everyone already knows that ever since the Joe Biden era, there's been a strong effort to block the sale of high-tech chips to China. Absolutely no, no, no. And this is continued from Biden's time all the way back to Donald Trump's era, where they also blocked and banned the sale of high-tech chips to China. That's why NVIDIA ended up losing its market share in China, just said goodbye to it. And the US government actually succeeded in doing this. So this has led to America has been able to maintain its national security by not selling high-tech chips to China, basically to prevent China from using American chips for military weapons and warfare. But when it comes to cash flow, it's taken a big hit too, because China used to be one of NVIDIA's biggest customers. And after losing China, Jensen Huang, the CEO of NVIDIA, has openly said that it's like losing a major customer, like a huge one, 95%, from 95 down to 0. That's a massive loss. Jensen Huang has said outright that this government policy is not a good idea. Let's listen to what Jensen Huang has to say for a moment.
Oops, they lost a huge percentage of the market. That's what happens. You can imagine how huge this is. Thanks for sharing your ideas.
Right now, everyone knows that the AI industry in the United States is in the middle of an AI bubble. That's what's happening. Whether the bubble will burst or not, nobody knows. But is it inflated? Absolutely. The most important thing at this turning point, which people are calling a bubble, is that the debt is just overwhelming. What matters most is the cash flow in the business. If a business has money, it's like having blood. It can keep going. But when a business loses its biggest client and can't get them back, that's money lost that can't easily be replaced. So what businesses need most right now in this time of crisis, or not, maybe not yet, it's money. Only money can help businesses survive. When the US government realized this, they were like, whoa, we can't do this. Cutting off China means losing customers, losing money. We can't treat our own country's businesses like this. So what should we do? So the government came up with an idea, super clever. They thought, why don't we sell China a version of the chip that's better than what we used to sell them, but not as good as the ones we use ourselves? That way, it's a win-win. China gets our chips, which they'll probably like, and we still get money from China. The chip in question is NVIDIA's H200. The US government said this about the H200 chips being sold to China. It's actually 6 times better than the previous model we sold to China. The H20 is 6 times better. And the US government reassured its own people, saying, don't worry, this chip isn't going to threaten America's security because it's still not as good as the ones we use domestically. So it seemed like a good solution, a win-win for both sides. The win might just be something one side is telling themselves. On the day Donald Trump announced that the H200 chip would be sold to China, NVIDIA's stock jumped 2%. As for national security, like I said, there's no need to worry. Selling the H200 chip to China is fine. It can't compete with the models we use here. Jensen Huang, NVIDIA's CEO, even said that the model we use domestically is called Blackwell. And according to NVIDIA's own research, Blackwell is 10 times faster than the H200. So there's really nothing to worry about. China can't catch up. So they went ahead and announced they'd sell the H200 chip to China, expecting that China would be eager and rush to place orders right away. But as soon as they offered it, China said no. They didn't want to buy the H200. David Sachs, the head of AI in the United States, the reason China refused to buy the H200 from NVIDIA is because they've figured out the strategic playbook of the United States. That US strategy is basically like sending a Trojan horse into China, sneaking in a spy hidden inside the chips they're selling to China. Honestly, it's not as evil as it sounds, and I'll explain what it's really about. But the US selling the H200 to China is actually part of a strategy where the US wants China to be dependent on AI chips from the US forever. But since China realized this, they decided not to go along with it. They said they would develop their own AI chips for domestic use. Now, when I talk about this so-called trap where China would be forced to rely on the US forever, it's not as simple as just making China get used to buying American chips and never developing their own, just because Chinese chips aren't as advanced. If you want high-quality chips, you have to buy them from America. That's a pretty shallow way of looking at it. There's actually a deeper layer to this. It's almost like the US is planting a Trojan horse to interfere with China's AI systems. Here's why. If China buys chips from the US and uses them, the whole system ends up running on American software. It becomes deeply embedded, and removing it later is nearly impossible. This is the software suite that are all interconnected. For example, if you want to use NVIDIA chips, you have to use CUDA. See, there are multiple complex layers involved. It's like whenever we want to use a piece of hardware, we have to download the necessary software to make it work, right? NVIDIA has its own software stack, which is made up of these different layers of software. If anyone can explain this better, feel free to share in the comments below. So yes, that means if you buy chips from NVIDIA, you'll have to use NVIDIA's chip. NVIDIA's software, which is American software, will always be required. That means you'll always have to rely on the United States. That's why China decided to develop its own advanced AI technology, aiming to reach the same level as the US. And to compete with the US and eventually win, China is pouring money into this effort. That's why the Chinese government invested as much as $3.4 billion into Morthread, which led to Morthread's IPO. When it launched, its value shot up by 425%. The Chinese government hopes that Morthread will eventually become a direct competitor to NVIDIA. And since the Chinese government can basically give orders, it's not just about pumping in money, providing financial support, or offering cheap loans. The government also issues directives or requests for cooperation from major companies like Huawei, Capital, and others to buy chips. And from local companies, too. Think about it. In a country where unity comes from government and from local companies, too. Think about it. In a country where unity comes from government mandates, whether people are genuinely united, the government can command it. Now, if China develops chip tech on par with the US, what happens? TikTok, it's not hard to guess. That answer gives America chills and makes them take notice. It means high-tech chips at Chinese prices, good chips at low prices. So if AI is the future of this world and what everyone wants is high-quality chips, then if China can produce high-quality chips at low prices, they'll flood the market again. Let me emphasize this one more time. I'm not saying this will definitely happen, but honestly, looking at what's happened so far, whether it's the peak or whatever, China has developed things incredibly quickly over the past couple of years. Is anyone really confident enough to say that China won't be able to develop chips to match America? Huh? But listen, don't just take this information and rush off thinking, hey, I should invest in Chinese stocks or buy into Morthreads right away. Take it easy. First of all, Morthreads, the company whose stock shot up 425%, is still just a newcomer in the stock market. It's still an IPO. So companies that are newly listed tend to be highly volatile. Second, regarding the Chinese government saying they'll support Morthreads, they're positioning Morthreads as a direct competitor to NVIDIA, but let's be real, Morthreads is still a rookie. Even though the government is pouring in a lot of money, the company's value is still just in the billions of dollars. In comparison, NVIDIA is already at $4.5 trillion. So calling them competitors is like comparing a rookie to a heavyweight champion. But to sum up this round, the US is still trying to sell chips to China, even if they're better models, expecting to win big. Whether it's trying to outcompete China or strategizing to plant a mole in China's AI industry, I have to say, in this era, America hasn't succeeded. So let's take a look inside China's financial system and monetary policies to see how they might support and help Chinese AI and tech companies grow to an impressive scale. I have to tell you, the information on this is really interesting. It might seem exciting, or you could look at it another way and think, wow, it's actually kind of scary too. Let's start with China's benchmark interest rate policy, known as the loan prime rate, or LPR. In other countries, they just call it the policy interest rate, but in China, it's called the loan prime rate. This is the reference interest rate that commercial banks use when lending to the public. The way China sets this rate has a much bigger impact on ordinary people, whether it's positive or negative. Now, let's take a look at China's loan prime rate over the past 10 years. Right now, it's at a record low. Basically, if anyone wants to take out a loan, the commercial banks are only charging about 3%. On top of that, HSBC Bank has also predicted that China's 10-year government bonds are likely to see their yields drop even further by 0.25% or 25 basis points, so they might end up around 1.5%. When yields are this low, it means borrowing money comes with a better cost. Lower interest rates mean cheaper debt, which encourages investors to borrow more for investment, and that gives the economy a better chance to grow. Honestly, having access to cheap financing is a huge advantage for Chinese tech companies, one that American tech companies can only envy. Because right now in the United States, tech companies, they've also been issuing a lot of bonds and debentures, but they're basically praying and waiting for the Fed to cut interest rates even more. Otherwise, the interest burden from all their debt might become unmanageable. But in China, the government just goes ahead and lowers interest rates, making it easy to borrow money so companies can invest in AI development right away. So why can China do this? Why can China lower interest rates this much? It's because China is experiencing deflation. To be honest, there are some factors. Certain industries, especially real estate or retail, aren't doing well, which is why there's deflation. But anyway, what I want to say is that energy, oil, electricity, and labor costs in China are actually really cheap. That's why China sometimes experiences deflation, sometimes not. It's kind of up and down like this. Meanwhile, in the United States, they call it inflation. Prices just keep rising. When it comes to lowering interest rates, the Fed is like, what should we do? Can we really lower them? And because of this policy, you might wonder if tech companies in China are borrowing money. Well, they're issuing bonds like crazy, starting with Alibaba, which issued a total of $3.2 billion in bonds. Tencent issued $1.27 billion in bonds. State Grid Corporation issued $618 million in bonds as well. And among these, a portion of the bonds were issued in yen, specifically to fund the development of AI industries in line with government policy. The Chinese government's first goal is that data centers in China must use Chinese technology. To recap and summarize briefly, China's monetary policy is something the government is currently shaping as a key factor. This is to ensure that Chinese tech companies can access funding at a lower financial cost than tech companies in the United States. And according to today's information, China's decision not to purchase H200 chips from NVIDIA, which the US government has been promoting, could potentially impact NVIDIA, which is at the center of the AI bubble, by possibly affecting its liquidity. It might not be enough, or we must consider if funds are enough for the US AI industry to move past the bubble. As I mentioned, China's monetary policy is impressive. China's AI industry seems set to thrive. It's exciting, but as I said, there are two sides. You could say it's exciting or a bit scary, because the government pumping in so much cash like this isn't the first time. They've done this before on a large scale. Everyone remembers two major events. Let's start with the most recent one. Do you know which industry it happened to most recently? The Chinese EV industry. It was just like this. The government pumped in massive amounts of money, both from the central government and local governments. But from 2019 to 2025, about 400 EV companies in China have disappeared. That is, they've gone bankrupt or shut down. They didn't make it. And the previous incident was even bigger. That was the real estate crisis. The Chinese government poured in money just as heavily. And we're talking about real estate here. Evergrande, which was huge, and Country Garden, which was even bigger than Evergrande, with company valuations in the hundreds of billions of dollars, have already gone bankrupt and disappeared. And most recently, Agile, or as it's called in Chinese, Wonka, has requested to postpone its debt payments. Who knows if it'll end up bankrupt too? You could say that the real estate sector in China has never really recovered since then. And importantly, to be fair, as for whether China will be able to develop chips that are on par with American technology, no one knows if it will ever happen, and no one knows when it might happen either. Even chip-making experts say that developing chips to match the United States is actually a really tough challenge. So we'll just have to wait and see. Chinese chips or American chips?